TFNN.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials up 27, NASDAQ down 18, S&P's down 1. Bottom line, really got a flat market out here. That being said, inside that NDX 100, the battle was on in a big way, folks. The strength inside the NDX 100, you had Tesla up 4%, Netflix was up 3.9, T-Mobile was up 3, and you had Western Digital up 2.89. Taken away from it, chip stocks are in big trouble. You had ASML down 4.5%, Micron was down 4.2%, Maximum Integrated was down 4%, Lam Research was down 3%. Now, what you had also inside the chip stocks is that you had Lam take out the February 9th swing low yesterday. It's a high-volume swing low. You had Micron going after it today, ASML going after it today. These high-volume swing lows from February 9th, folks, are going to prove to be a problem inside the market in general, particularly inside the NDX 100 as well as the NASDAQ, because that high-volume swing low inside those indices is a lot lower. Gold, silver, platinum, copper, all caught a bid. You had the silver market up 14 cents, $14.19. Gold up $9.50, $12.11. Platinum up 11 bucks, 800. Copper up 6 pennies, $2.66. That was all about good old King Dollar. King Dollar couldn't handle higher price. Start moving down yesterday. Had volume yesterday. If we go take a look at King Dollar out here today, what you're going to see is that you get into lower price, and you had a pretty good expansion of volume out here. We've done 34,000 contracts. That's big contract volume inside the dollar index. Bottom line, what I expect you're going to see now is that you're going to go after the strength. King Dollar had a monster day on the 14th of June, folks. That's when King Dollar went from 92,820 up to a price point of 94,605. That was the break top side. You know, ended up higher high. Bottom line, what that was trying to do then is get over the swing points from 2016. If I bring this back, I'm going to bring this back on a continuous contract for you, and you'll see what it was trying to do. Bottom line, you know, took some time to do it. Took about 6 weeks to get over that area. 95.06. Well, we just got back inside that area today, and we've been outside that area now approximately 6 weeks. Yes, this is the 6th week. So, what does it set up? It sets up, you got a failure now. The day of the 14th of June is going to be really important. The reason that's so important, it's going to be hard to break down that day. You know, when you get a wide price spread, when you get monster volume like that, when you get back inside it, guess what? You're going to need, that's your equilibrium. You're going to need more buyers than, you need more sellers than buyers in order to break that down. We'll see how that shakes out. What you do have, now that's on the daily. On the longer term deal, you just failed. Because we just got back underneath the 95. Now, we're only 200 ticks underneath it, but the bottom line is that you're underneath it. And what would that set up? That sets up, first off, that it'll try to get down into this 92 area, and, you know, we'll see where that goes from there. What we do have is that you have an aspect that the correlation inside the bond market, you have some divergence, and what that divergence would be is this. Bonds out here came down from a price point of 10-year note. Let's do the note first. Note came down from a price of 120.20. We came down with volume on the 7th of September. It had wide price spread, had huge volume. Yesterday, you came down. It's not that we didn't have high volume yesterday, but it couldn't hold price. What's worrisome with the note and bond market right now is this. Yesterday you come down with 1.3 million. Now what we didn't do is that we didn't get underneath this level today. If I would have felt much better, meaning if we got underneath the level and then had the bounce. Because then what you could argue, and the theory would be, is that you get a rejection of lower price, you have lighter volume, it's going to build costs to go higher. Well, we didn't do that. What we did is that we went higher and you had volume contract somewhat. We did 1.2 versus the 1.3 yesterday. So that is saying that, hey, that could be a problem. That could be building cause to go into the swing low that's left over from August 1st. And August 1st is 118.27. And the 30-year bond is set up the exact same way. Apple come out with their announcement out here today. Bottom line, Apple's down 278. That being said, what you're going to see, you're 221. The high is out here is 229. What I expect we're going to see is that 229 bottom line wants to get hit. You know, Apple is at the high end of its range. It's up there. What Apple loves to do, it seems that it can come up with it. You know, years ago, Apple would come out with an announcement, and yeah, it would go gangbusters right away. Last 2 or 3 years, they haven't had any big announcements, huge announcements. They haven't had huge announcements. There have plenty of announcements. What seems to happen now is that they come out with an announcement, everyone sleeps on it. The next day, it gaps higher, and I suspect that's probably what we're going to have in this particular case. Some of the higher volume equities out here inside the marketplace today. We had the Bank of America down 42 cents. We had Facebook down 394. That's trading 162. Let's go over to Facebook for a second. So Facebook, this baby is making its way down to this 149 area. It's off the high of 218. We bring this back. You take a look at it, and you talk about sticking out like a sore thumb. 149 from March 30th. The week of March 30th is laying out there. Now, what Facebook also has, folks, this is where this is going to get wild, is that Facebook has volume off its high. When you get volume off your high, what I've found is that your corrections are much larger than a normal correction. And one of the fundamental aspect of that goes to the price point, goes to the point rather, that you have large funds that are getting out of the market and got out of the market, and there's no support as that is moving lower. Stay right there, folks. Good, I'm Mr. Jim Prince coming up. We're going to be growling and prowling. We're going to be going through some of his charts. Coming right back.
Hi, folks. Tom O'Brien here.